Instead of curbing the imports, you figure out how can you attract more, dollars.
Right. Okay.
Always, India has reformed during crisis. So I think a crisis is always welcome
Yeah.
because it's painful in the moment, but when you look at it 3 years, later, crisis is what will, fast track
Because
reforms.
yes. Hello and welcome to Macro Depot. The government has asked citizens to take austerity measures to control the forex outgo at a time when the crude oil prices are rising amid unrelenting Iran war. Let's talk to Prabhakar Kudva, Director and Principal Officer, Portfolio Management Services, Samvitti Capital, to understand more about our forex levels and the measures needed to improve it without affecting the consumption and growth of the economy. Welcome to the show, sir.
Thank you.
So, as per reports, India's forex reserves are currently around $690 billion levels. If you compare with forex reserves during the 1991 crisis, 2008 crisis, pandemic, and post-pandemic time, how bad or good is this level?
I think India has come a long way since 1991 and the liberalization post 1992.
Right.
So just to give you a sense of the numbers, right? I thought back in 1991, the reserves, the dollar reserves with India were closer to $1.5 billion, right?
Okay.
Compare that to about $700 billion, that we have now. So we are up 700x, right?
Yeah.
And this has been increasing steadily and progressively, right? So 1991, if it was about $1.5 billion, I
Hmm.
think by the time we had the 2008 crisis, it was about, I think, 200, $250 billion.
Okay.
Right. And up until a few years back, I think we were at a number of about around, 500 odd billion dollars. And today, I think we are closer to $700 billion. Of
Right.
course, from that high number, it has come off a bit because in the middle, RBI did use the dollar reserves to intervene and support the rupee. I think the number of 680 odd billion dollars is very, very comfortable compared to where we were in 1991.
Yeah.
So I don't think there is any crisis of that proportion right now. It is just that the very short term trend is a bit concerning because with the other geopolitical concerns, right, it is putting a lot of pressure on the rupee.
Okay. So, with this kind of forex reserve, how many months of imports can India make? And why is there an alarm today? You just said, as far as forex reserves are concerned, we are at a comfortable level.
Right.
But what is the thing that is making us alarm?
Yeah, to answer the first part of your question, I think the import cover, if I have the numbers right with me, is about 10 to 11 months worth of import cover.
Okay.
Generally, economists say that a good number is about 6 to 7 months. I think we are comfortably above that.
Right.
It's a crisis of confidence. There is no actual economic crisis, but it is a crisis of confidence in the rupee because a few things have come together, right? So one definitely is the Iran and the US war,
Right.
where the oil price uncertainty is around us, right? So we don't know how high the oil prices can go in the short term. That's one uncertainty. The second bigger uncertainty is FII outflows, right? Generally, the outflows that are happening, they put pressure on the rupee. And number three, counterbalance that, generally we have the IT services, right, which are one of the biggest sources of the dollar inflows for us.
Hmm.
There is a big question mark now around that business model, right? Whereby because of AI, people are saying, how sustainable is this? So all of that is leading to a speculative hit on the rupee, where the rupee is depreciating very rapidly.
Yeah.
It's
That's
right.
right.
It's
Yeah.
closing in on the psychological mark of 100. Purely from a number point of view, we are comfortable. But it's more of a crisis of confidence in terms of can it get worse, can it get bad, and all that is being accentuated by the global geopolitical uncertainty.
Okay. What are the biggest pressures on Indian forex reserve? On import side, it's oil, gold, electronics, or is it the capital outflows that is a major pressure on the forex reserves?
Yeah, it's all four of them, but if we have to rank the pressure, I think it would definitely would be crude being the number one, right?
Yeah.
Because that is a structural, sustained import. Gold on some levels is still something which people can avoid, but crude is not something which we can avoid importing, right? Because that is important for sustenance, it's important for industries, it's important for it's basically the lifeblood, right, of the economy. So number one definitely is crude. Number two, electronics and gold are very close to each other today, right? And so
Yes.
electronics imports is also a big thing. Finally, it is the FII, outflows that is putting the pressure. But primarily, it is the crude, right?
Right.
So I think a resolution should come, and if the crude problem gets solved, very quickly the sentiment will change and it will turn for the better.
Now that we have a concern about forex reserves, what needs to be done? Previously, if you look at, we were able to bring in forex through FCNR and NRE deposits, as well as we had issued bonds to improve the forex situation. Can you briefly tell us about how these instruments in the past have helped the country in bringing more forex?
Sure. So I think it was Raghuram Rajan, right? He was the governor and he came up with this whole FCNR deposit scheme,
Yeah.
whereby when India was going through a similar crisis of confidence, this particular scheme where the NRI depositors were promised, a high and a fixed rate of interest, and the rupee depreciation was covered by the RBI,
Hmm.
right? So that attracted close to $30 billion in a very short period of time, right? So such
Yeah.
a big inflow. What it means in layman's language is when you have to bring in $30 billion, right? What happens is there is you people have to sell dollars and buy rupees, right? So which automatically leads to appreciation of the rupee. And when an appreciation starts like that, the speculators who are short the rupee are again forced to cover. So it leads to a double support for the rupee, and the rupee appreciates very rapidly. And when the
Okay.
rupee appreciates very rapidly, the FII is also, because it benefits them, right? Even
Right.
they kind
Yeah.
of come back. So it's like a virtuous circle that
Right.
starts, right? So
Right.
if you get
Right.
one trigger like this,
Huh.
then very quickly the rupee can at least if not appreciate rapidly, at least stop depreciating, come back to stability, give confidence to the entire system, and bring back a level of sanity. So I think definitely there are two three things which the government can do. One is the tried and tested FCNR, which a lot of economists are talking about, and which may come. And number two is just last week there were some rumors that the taxation on bonds for FIIs will be tweaked, right,
Okay.
to help them to help attract. And of
Right.
course, the long-standing demand from the capital markets industry that the FII taxation on equities, something which only India has. No other country taxes the FIIs on the long-term capital gains. So
Oh.
these three things, or any one of them or two of them, if they are done right, that can very quickly change the confidence and the sentiment levels.
Okay. If you look at the past, even after we made a nuclear test and we had an economic sanctions. At that point of time, also we had raised a considerable amount of forex through these
Yes,
FCNR and NRA. So I think that's a time-tested kind of an instrument. Do you
absolutely.
think so?
Absolutely, absolutely. And the outgo for the government in terms of the risk that the RBI is taking in terms of the interest, I mean, because they have to give a fixed interest rate, right?
Yeah.
So that amount compared to our current balance sheet is very small. It's going to be a few $1 billion. So the benefit of that is going to be 5x, 10x in terms of how much we will save on the crude, how much we will save on the imports. So it's actually a no-brainer, and hopefully the government will take some steps and do any one of these, two, three things we spoke about.
We are the one of the largest recipients of remittances from abroad, and during this kind of a situation, how can we actually increase the remittances? What kind of things, incentives can actually make the NRIs abroad to remit more into the country?
It's important to understand how much better remittances are than FDI or FII money, right? Because this FII money is typically called as hot money
Right.
because it will come during the good times and go out during the bad times.
That's
Whereas
right.
remittances that come in are structurally, they are coming into the country and they get invested here and they are unlikely to go back,
Go
right?
back. That's right.
So it's a structurally a much more stronger form of capital that the government should attract.
Yeah.
Now the problem today are for remittances are again two. One is the simpler problem of the documentation, the technicalities, the costs involved. So I
Hmm.
think government is already working on enabling UPI for the remittances, especially from the UAE.
Oh.
Those talks have been going on. So if the money can seamlessly flow into India without any of these KYC and technical documentations, and especially the cost
Hmm.
of remittance that can be cut down. A lot
Yeah.
of money want to come into India, and a lot of NRIs do want to support the country. They do want to make investments here. They're more comfortable putting the money in their own country, right? So
Yeah.
that's definitely a channel that should be tapped. The second
Okay.
point for remittances is is the confidence in the INR. right? If there can be a confidence that the INR will be protected, the policies and the reforms will ensure that the INR, doesn't depreciate in a runaway manner like what has happened now, right? That will give the NRIs even more confidence to, keep pushing money here, right? Those are two steps they can take.
Also, if you look at the NRIs in the Middle East, for them, there is a lot of uncertainty in their own region. And at this point of time, can the government make some kind of a promotion, giving them a comfort that, your money will be safe in India? So that kind of a promotion, will it actually help at this point of time?
Absolutely, absolutely. But what I speak to a lot of NRIs, and the thing is, see, they are not, they don't question the fact that they should be investing in India, right? They like investing in India. They want to put more and more money here. The only problem that they have, or the only fear that they have, is the rupee depreciation, right? Because if their money is outside, every year on an average, rupee depreciates 4 to 5%, right? And if you look at the long term CAGR, so that 4 to 5% is, a free sort of a return that they're earning if
Hmm.
they park their money in dollars, or if they park their money in their, let's say, some Middle Eastern currency, right?
Right.
So, that, if that can be stemmed, right? If the policies and the reforms, so more than a promotion, it has to be something structural, which gives them the confidence that the rupee is not going to, depreciate, very fast. So I think that will give them the confidence and motivate them to push a lot of money into India.
India also has an history of pledging gold when there was a balance of payment issue. Today, if you look at, most of the central banks are actually increasing their gold results. So how viable is pledging gold as a solution for the current crisis?
The pledging gold is like the worst case solution, right? If
Okay.
I can give you an analogy, right? Even
Yeah.
even in our individual balance sheets, when does somebody pledge their gold, or when does somebody go out and sell their gold? Right? It is when this financial situation is extremely bad.
Hmm.
I don't think we are anywhere near a situation where we will need to pledge the gold.
Okay.
The situation is much better than what it was 5 years back, 10 years back, definitely 20 years back. It is a short term phenomenon which has to be handled by policies, right? It has to be handled by the right reforms.
Hmm.
And like I said, right, it's not an economic crisis. It is a crisis of confidence. And currency is driven by the confidence in the government, the confidence in the economy and the reforms, right? So I think the focus has to be in fixing that. And that is what is in our control, right? And the second thing is the war, which is impacting everybody, and the oil prices are shooting up. Inflation is going up not only in India but across the world. So that is an area where we don't have so much control, right? Where we
Hmm.
have to just bide time and ensure, and just hope that the war gets over, sooner than later. But on
Right.
our side, we should focus on the reforms and wait for the geopolitically things to settle down. And I think 1 year down the line, I think this issue should be definitely behind us.
The government also has taken a few measures like increasing import duty on gold and silver. But if
Yes.
you look at the past, several governments have done this whenever there has been a pressure on the economy. But how much do you think this kind of duty hikes will help us in curbing the imports?
To be honest, I don't think it will help much because see, people in India buy gold, when they need it, right? So it's mostly for weddings, right? And it has turned out to be a brilliant investment for Indians because it takes care of the rupee depreciation. Because when the USD
Right.
appreciates against the INR, even the gold price appreciates to the same extent.
That's right.
So
And it's an
gold,
inflation hedge also,
an
like
inflation
the
hedge
kind of
also.
inflation we are seeing. Yeah.
Yes, yes. So and we have had several duty hikes in the past, like you mentioned, right? I think none of them were able to structurally change the buying intention of the end user, right? So there might be a short-term period where people will step back for a month, a couple of months because the duty hikes, but eventually they will get used to that higher price. And like I said, it is not a choice. In a lot of cases in India, buying gold is a necessity. It is something which people do when there is a wedding. And just today morning, I was reading in the newspaper that already a lot of pre-buying is happening, right? The
Right.
weddings which are scheduled in the next couple of months, people are going out and buying, because they think that more, policy measures will come which will discourage them. So
Oh,
I think some of these measures are more from a restrictive side, but I think the government very soon will focus on the positive side of things, which like I said, is instead of curbing the imports, you figure out how can you attract more, dollars, right?
right,
I
right.
think
Yeah.
that on that side, some reforms should definitely come.
Okay.
Always India has reformed during crisis. So I think a crisis is always welcome
Yeah.
because it's painful in the moment, but when you look at it 3 years, later, a crisis is what will fast track
Because
reforms.
yes,
I think
that's right. That's
I
right.
think we should very soon see some development on that front.
As you rightly said, we are seeing a lot of heavy outflow of FIRs and FDI money. And are there ways to retain them in the country? But we were actually discussing about the way rupee has been depreciating. But apart from that, is there any way we can retain the money in the country?
See, part of the FIA outflow is cyclical. Part of it is because of certain, India-specific issues, right? So if you see 2, 3 years back, India was the darling of all the investors, right? Amongst all
Right.
the emerging markets, India was, the most overweight. India was doing extremely well, and this is just like 2.5 years back. And then, the other markets of Korea and Taiwan and Japan, they all started doing well. So naturally, money got out of India and went there because they were overweight India and underweight those markets. So that part of it is cyclical. So I would say, about 60, 70% of the FII outflow is cyclical. And maybe about 30% is because of certain factors that we spoke about, like currency, like taxation, fact that our own growth rates, right, generally had slowed down in the last couple of years. The growth rate
That's
of corporate India
yeah.
had slowed down, right? Which again seems to be picking up from this quarter. But we've had this war, which is kind of taking a toll on the margins. So I think the cyclical factors also should start turning very quickly because Korea and these markets have gone up significantly, right? So there will be mean reversion there.
Hmm.
So some profit booking will happen there, and money will again naturally start flowing back to countries like India, which are underweight now.
Yeah.
Plus, if the earnings growth picks up over the next 2, 3 quarters, then that also should push. But most importantly, that extra, icing on the cake will come only if, there is some tax advantage that the FIIs are being, given, which should push them and motivate them to fast track those inflows.
As you rightly pointed out that we should be actually looking at more proactive ways to getting more forex rather than curbing the consumption and outgo. On the export front, what are the sectors that can increase the forex in the short term?
Exports, already are firing quite well. So there are 2, 3 sectors which contribute massive. Right, one we discussed is IT services,
Hmm.
which anyway is sentiment is bad, but the underlying fundamentals of the financials are still well. Companies are growing, right? Then there is business services, which is non-IT, other services that we provide.
Yeah,
And then there is a big dollar inflow coming due to what is called as GCCs, the Global Capability Centers.
that's right.
Lot of them are being set up in India now. A lot of these big companies are setting up their own IT services units here.
Hmm.
So GCCs is one area where massive investment is coming. In the recent budget, right, the government has also significantly given a tax advantage for setting up of data centers here. So a
Hmm.
lot of these hyperscalers in the US are looking at setting up data centers here. So I would say the focus should be on IT services, business services, GCCs, and this whole data center type of setup. I think these put together can really attract a lot of money.
The government, whatever measures it has taken, is mostly to curb the consumption and outgo of forex. So this, will also slow your GDP growth, and we would probably move into a stagflation kind of situation where the inflation is already high, and we will see a stagnant growth. What immediate steps can the government take to preserve the forex without sacrificing the growth of different industries?
I think that is a tough question, and that is what the government is grappling with right now, right? But like I said, a lot of this is like crude or any of these things are not you cannot choose to not import them, right?
Yeah.
So that is why the government is trying to discourage buying of gold and silver, which are not day to day necessity items. I think there is no easy answer. There is no short term fix. Like I said, the first thing that the government has to do is to reverse this crisis of confidence, and this can be done by the few reforms that we spoke about, right? Because curbing cannot be done beyond a point, right? And a lot of the curbing will not also be translated on the ground. Take more positive steps towards encouraging or attracting more investments. I think that is the way forward.
So that was Mr. Prabhakar Kudva. He was telling us the current crisis on Forex reserves is not structural, but that's a crisis of confidence. And to improve the situation, the government should proactively work on getting more Forex into the country, attracting FIIs and FDI, and also get money from the NRIs who are there abroad. So these kind of measures will probably help us maintain our Forex situation much better. So thank you for joining me on the show, sir.
Thank you. Thank you so much.